Looking at the global economy, the most remarkable development over the past decade has been the steady and continuous growth of the US. The United States came out of recession, out of the 2008-2009 recession at the end of 2009. And we've had now 10 years of uninterrupted US growth. That is the longest upswing of any economic cycle in recorded history, and the records go back to the middle of the 19th century. It's not blown the doors off. It's not been amazingly strong growth. It's averaged somewhere around 2.5%. But it's been consistent. And that consistency of growth has given a fairly firm underpinning to the global economy. There are doomsters out there who say that it's inevitable that after such a long period of growth, you're bound to see a downturn, possibly a recession. And that at some stage may well be the case, but there are no signs of it at the moment. There was a recent opinion poll, a Gallup opinion poll, which showed that US consumers are more optimistic about their economic position now and in the future than at any stage since the 1970s. Very good news for Trump possibly going into the November presidential election. But it does mean that consumers are seeing rising real incomes, increased employment opportunities, a rising equity market, a mini boom in the housing market. All of those things are boosting consumer confidence, and with growth of real incomes they're prepared to spend, you're seeing ongoing growth of about 2% in the US economy in the fourth quarter and going through the course of this year. The Fed is sitting on the sidelines, having cut interest rates to give a degree of support to growth. It now has a comfortable stance of policy with the policy rate just below 2%. So the expectation that what we're likely to see is ongoing, steady, if not spectacular growth in the US. The other end of the spectrum in terms of the global economy has been what's happened in the Eurozone. And the Eurozone has had a very disappointing year over the past year, and growth almost disappeared by the end of the year. What we saw with Trump's aggressive trade agenda was a slowdown in the growth of world trade. We also saw a slump in the car industry worldwide, both in terms of sales and output. That hit Germany particularly hard, hit Italy quite hard. That's also another export-dependent economy. And so we've seen stagnation in the Eurozone economy. So we're studying contrasts, solid growth in the US and a very disappointing environment in the Eurozone. The focus now, of course, is what's going on in China. China had a good year last year, surprisingly. A lot of people thought that the Trump tariff agenda would hit Chinese growth hard. In fact, it didn't do so. And Chinese growth was steady through most of the year, around a 6% pace. Clearly, the onset of the coronavirus is going to hit Chinese growth hard. It's not just the impact of the disease itself and the toll that takes on human life. It's the measures that have been taken to prevent its spread and the shutting down of industry, the closing down of transportation networks. How badly the Chinese economy will be affected, not clear at the moment. 6% growth may disappear completely for one quarter or possibly two. The expectation in financial markets is that looking at past experience, like the SARS epidemic in 2003, is that these things tend to be transitory in their impact, both in terms of economic activity and financial markets. If that is the case, and it's a fingers crossed view, then we might see a recovery in the Chinese economy around the middle of the year and a reversion back to something closer to that 6% trend growth we saw last year. If that is the case and we can survive this crisis, then we're still looking at a reasonably good outlook for the global economy, because you will see steady growth in the two largest economies, in the US and in China. And the hope is that if you see that sort of growth going into the second half of this year, then that will drag the Eurozone economy up with it, and you may get a more balanced pattern of growth in the second half of this year.